Ladies and gentlemen, welcome back to the Peterson Institute for International Economics. I'm Adam Posen, president of the Institute, and it's my genuine pleasure as well as privilege to be hosting today Jeroen Dijsselbloem, the finance minister of the Netherlands. I'll introduce him in a moment. This is, I believe, the second or even third time we've had the privilege of hosting him here for a public event. And just to continue something I've said before, we're very proud at the Peterson Institute to be the center for serious economic discussion of European issues in both Washington and we like to think the U.S. And part of that is because we have friends and colleagues in the key European leadership roles who want to engage, who want to explain and justify and advance their positions in a substantive way to a substantive audience. And it's in that spirit that I welcome the minister today. He probably needs no introduction, but Jeroen Dijsselbloem is, of course, the Minister of Finance of the Netherlands and has been Eurogroup president since January 2013. In 2013, the Board of Governors of the European Stability Mechanism also elected him as its chairman. So he is dealing both with the underlying financial situation as well as the top-down macro situation, something most economists only dare to do one or the other, so well done. He is, of course, was appointed Minister of Finance in the current government in the Netherlands in November 2012, a position he still holds. Prior to that, he was a member of the Dutch House of Representatives from 2000 until becoming finance minister in 2012. This is an on-the-record presentation. We're very grateful to the Dutch Embassy as well as the minister and his team for joining us again. After his remarks, I'll pose a couple questions, and then we'll take questions from our distinguished audience. But first, Jeroen.
Thank you, Adam. Thank you for the opportunity to come to Peterson's again. It's becoming a tradition, which you welcomed. I would like to take just the opportunity to talk about the state of the economy and the obligations that we politicians have to move things on, to put it simply. It always seems that in the days before we have our IMF meetings, things turn a little gloomy. I'm not saying that the IMF is to blame, but certainly the IMF pointing to risks, which there are, and there are several at the moment, always gives a sort of an atmosphere of, oh dear, here we go again, we're back into crisis. And I would like to say, first of all, that I don't think we are back in crisis, nor need we move in that direction. The economic recovery, certainly in the Eurozone, is continuing. We are now, I think, for the third or fourth year in a row in economic growth, and the growth on average in the Eurozone is stronger every year. Very gradual, not strong enough, but stronger every year. So the recovery is continuing, and it is picking up further. We need to harness economic tailwinds, and at the same time try to reap the benefits of the work that we've done to strengthen the euro area economy. A lot of work's been done in the member states, and the effects of that are positive at the moment. Let me just say a few words about the decisive actions that we undertook to reinforce the foundations of the monetary union. It has increased fiscal and financial stability, and the euro area is in a better shape thanks to that. Yet the crisis has inflicted long-lasting scars. The measures we took to ensure fiscal and financial stability and sustainability have been painful and have affected some of the most vulnerable people in our societies. Ordinary families have not always shared equally in the benefits of the economic growth. And I think that's also a theme at the moment in the US. It is this inequality that causes a stronger sense of insecurity and disaffection in our societies. And yet adjustments and further adjustments are unavoidable to maintain our high level of social welfare and to reduce that inequality. So it's time to look forward, to redirect our gaze to policies that will make the economy more robust in the long run. And that means rethinking the instruments that we have in our policy toolkit. First, Expansionary monetary policy, much debated, certainly in my country, but in many countries, I believe, it supports the economy in the short run. That is undisputably so in my mind, but the limitations are imminent and negative side effects are becoming stronger. Second, fiscal policy. It needs to be geared up towards a long-term strategy to improve the quality of public expenditures. Third, we need to re-accelerate the engine of convergence. The convergence machine that Europe has been for a long time needs to restart. It requires innovation and requires structural reforms in our economies. So let me elaborate on these three issues. On the past few years, monetary policy has been highly accommodative in order to bring inflation towards its target level. And the current low interest rate environment acts as a tailwind for our economy. It supports the economic recovery in the short run. But the effect is short-lived. It simply cannot foster a sustainable recovery if underlying structural problems are not addressed. It only creates the conditions and allows time for governments, for politicians to implement difficult structural reforms. But in due course, a sensible strategy to phase out this policy has to be designed. And we have to face the fact that expansionary monetary policy can have negative side effects like potential financial instability. If bubbles are created, if they occur, monetary tailwinds can turn into a windstorm and lead to boom-bust cycles. So let's be well aware of the limits of what monetary policy can do. On fiscal policy, I firmly believe that it needs to be geared towards a long-term strategy to improve the quality of public finances and to improve equality in doing so. The European Commission's recent forecasts indicates a broadly neutral fiscal stance for the euro area as a whole in 2016. This stance reflects a balance between long-term fiscal sustainability and short-term macroeconomic stabilization. But beyond this fiscal stance, there is a clear need to look at the composition of our expenditures. It's our common goal to foster durable growth. By improving the composition of public expenditures, our social welfare state and equality can be addressed at the same time. Now let me give you an example of how that can be done. The tax wedge on labor in the euro area was already relatively high before the crisis, and during the crisis has increased even more. It's an obstacle to all efforts to boost growth and create jobs. But we're making progress in this area. In the Eurogroup, we've set a benchmark against which we measure our performance on the issue of the tax wedge on labor. This benchmark exercise, together with sharing best practices, gives fresh impetus for further reforms and reductions in this field. Lowering the tax wedge not only fosters economic growth and employment, if designed well, it also reduces income inequality. On the expenditure side, there is a need to look at public investment and education in particular. Instead of increasing in the money we spend on education during the crisis, many countries in Europe cut back on this part of their budget. So why is education so important? Because inclusive growth is key for creating innovative economies that lead to sustained prosperity. And education is in turn essential for stimulating income equality and social mobility. In the past few years, inequality has risen in OECD countries. It's a worrying trend, as high levels of inequality can lead to lower social mobility. Especially for the bottom 40% of families on the lowest incomes, people that have less access to high-quality education. And analysis shows us that both the level of spending on education and the quality of education can be improved. Of course, the picture varies between different euro area countries, but the euro area as a whole has not reached the efficiency frontier yet. There is ample room for improvement. Improving the quality of public finances is only part of the story. The key to fostering sustainable and inclusive growth is structural reforms. And in recent years, we've made progress. In the European Union, we've established the Banking Union and started work on the Capital Markets Union. In various countries, reforms have boosted productivity and competitiveness. For example, the labor market in Spain was rigorously reformed in 2012, resulting in quite a strong growth of jobs in the following years. Product markets in Portugal and Italy have been reformed, opening up various sectors and stimulating economic growth in these countries. And actually, Greece, too, has implemented some important product market reforms, such as measures to make it easier to start a new business. These reform efforts propelled Greece from the 109th spot in the World Bank Doing Business Index in 2010 to the 60th place in 2015. And it has laid the foundations for further economic growth. At the same time, public support, political support for structural reforms is fading. Years of austerity have affected the everyday lives of families and individuals. Measures are tough and the benefits are not always clearly visible or not in the short run. The strength of support is being further sapped by uncertainty stemming from migration and the threats of terrorism. So structural reforms are becoming more and more challenging, but we simply have to move forward. With an aging population and low productivity gains over the last decade, it's essential that we further encourage potential growth by means of policies that maximize productivity gains. Policies to further integrate internal markets, expand trade opportunities. Policies that strengthen our economic structure by making labor markets function better, making taxes less distortive. But while these policies are essential, if we are to maintain and increase our level of social welfare, they are often also perceived as a threat to our welfare system. Insecurity about further reforms is understandable. People have not profited equally from economic growth in the past. Disposable income has increased, but less than GDP growth per capita. And this is true for all income categories, but of course, mostly for the lowest incomes. This is due to an increase in capital-to-income ratio combined with the hoarding of profits. Companies and wealthy investors have gained more. I think that's also why the Panama Papers have triggered such an outcry. Some measures taken during the crisis only served to heighten this effect. Banks and their investors, for example, were supported at the taxpayers' expense during the bank bailouts. This was necessary to save our economies in the short term, but did not correct problematic incentives in the sector. In the long-term policy we've devised, we've succeeded in turning this situation around. For example, by introducing bail-in rules for the banking sector. Investors and risk takers will bear any costs in the future rather than the taxpayers. They take the profits in the good times and must carry the losses in the bad times. A sound economic and fair principle. And there are other ways forward, other ways we can support sustainable growth and reduce inequality. As I've said, education is key in driving growth and readdressing inequality. Tax reforms can contribute. We can move away from tax on labor to less distortive taxes. And we have to work on reforming our product markets in a way that opens up closed oligopolies, creating opportunities for outsiders, and thus introducing innovations much faster and stimulate job growth. So let me make a few final remarks. After the economic crisis, the groundwork was laid for a stronger economy. At the same time, we're not resilient enough for the next crisis, if it may come and when it may come. So we need to continue making our economy stronger, also with the goal of maintaining, certainly for Europe and the euro area, a high level of social welfare and equality. Expansionary monetary policy has played its part, and the same goes for expansionary fiscal policies. Now it's time to shift our focus to policies that foster long-term and sustainable growth by increasing the quality of public finance and by carrying out well-designed structural reforms. In the past, people have not always benefited equally from economic growth, and support for structural reforms has for that reason fallen. Our task then is to devise policies that foster economic growth and reduce inequality. Social fairness and opportunities for all should again be at the top of our agenda. Thank you very much.
Thank you for making a tradition despite our less than 21st century technology. Thank you, Minister. We're very privileged to have had you come back here. Oh. Ooh. All right. Thank you, Jessica. And in particular, I just a couple questions before we open to the floor. In your remarks, you were very forthright about talking about the higher capital share in income, which is, of course, a fact, and is one at least as strong in the U.S. as in Europe. And about what you referred to as the hoarding of profits, which raises a whole host of issues, including the common challenge we have in the U.S. and Western Europe of a lack, or Eastern Europe as well, a lack of corporate investment, even with the interest rates being very low. I know you had touched on these things in your remarks, but if I could ask you to expand on those points a little bit. First, as chair of the Eurogroup, what do you see can be done about the lack of impetus to investment, both within Europe, but also as you're here part of the G20 process? And secondly, as a longstanding elected official, as a politician, you made reference to the fact that the inequality, if I understood you correctly, you made reference to the fact that the inequality we've seen is pushing against the ability to implement structural reforms. If you could say something about what you think could be done in the short term to build that consensus for reforms, or as we here at the Peterson Institute worry about, particularly in the US context, build support for openness to trade and to investment.
Right. First, on the hoarding of profits, of course, it very much depends on which country you are, but I think it is an issue that is in many of our countries actually there. I think that in a number of sectors, in a number of countries in Europe, there is real room for wage increase, which is another way to deal with the hoarded profits. Wage improvement has been very, very low, certainly for middle-income people, working people. There are more and more, and that's an issue in the US, it's an issue in Europe, more and more working poor that need actually more jobs to simply supplement their income. And in a number of sectors, there is real a possibility to increase wages. And that would certainly help in improving demand. Right. In many European countries, demand is picking up, it's becoming stronger, very gradually, but it's still very low. And that in itself, of course, would have an effect also on business opportunities. The other approach is that creating investment opportunities in Europe. There are lots of opportunities here, and that brings us again to the issue of structural reforms. Many markets, many sectors, many professions are still very much closed and protected and regulated. That has an effect on businesses trying to get into markets, trying to get access to markets. It also has the same negative effect on individuals. More and more people try to set up their own business. I don't know whether that is also something that's happening in the US, but it is happening in many European countries. Also caused because there is no job at a company. Let's try something for yourself. But if you realize that throughout Europe there are thousands and thousands of regulated professions, And there are still many markets that are very closed. For example, in the service industry, if we could open those up, it would create a lot of investment opportunities, and it would create a lot of opportunities for individuals to start up their own business or start up their own economic activities. So I think looking at how the economy in Europe still works,
Yes.
Opening it up, deepening the internal market, certainly looking at the service industry, service sectors, there are a lot of business opportunities that we could create that are being protected at the moment.
Just a brief follow-up on that, although officially I think takes you a little out of your realm, but here I would be remiss if I didn't mention this. Europe, of course, is pursuing with the U.S. the TTIP trade agreement. Europe is, I believe, pursuing the TISA, the Trade and Services Agreement. Do you see this as a major way to open up competition in services in Europe, or do you feel that it's going to come directly internally from the Commission, from the Eurogroup, from the national governments?
The international trade agreements are difficult at the moment. They're difficult in the political and debate here.
Oh, yes, we know that.
In the US, but also in Europe. The feeling, right or wrong, is that international trade agreements take away some of the things that we have established in terms of, for example, the quality of products, or the safety of products, the environmental policies that we have for our industries. And people are afraid that we will lose or have to reduce those standards again because of international trade. And here's the big concern. I think the only way to successfully move forward in trade agreements is to prove to our electorate that trade agreements certainly has the advantage of more trade, more growth and job opportunities without losing everything that we have established in terms of our high standards of safety, the environment, etc., social rights. There is a great concern in Europe among the electorate that trade agreements take away what we have established in terms of protection, social rights, environmental protection, etc. So if we can't take all of those issues on board in the trade agreements and reassure people, my approach would be that it's just not good enough to have a very high standard of social protection or environmental protection in your own country, because if all your neighbors don't have that protection, first of all, your economy will lose, and secondly, what is actually the use of it? If the river next door is still polluted, in the end it will come to you anyway. So the best way to really get high standards on the environment or social protection or human rights is to do it as international as possible.
Yes.
And trade agreements need to be locked into those issues, or the issues locked into the trade agreements. Have we done enough? Is it good enough? I don't know.
Right.
We certainly need to convince our electorates here and in Europe that there is an opportunity here to bring those two together.
No, and thank you for going on to talk about that. I know you can talk about a range of issues. We had the privilege to host the EU Commissioner of Trade here last month speaking about these issues, so it was good to hear it from your perspective. Can I turn now, your economic case in your speech was extremely tight, but the wild card in some sense does seem to be the migration issue for Europe, both politically and economically. I know you've given, from past conversations, I know you've given great thought to the question of turning the potential opportunity of having new labor force into reality. Where do you think Europe stands, and what do you think Europe should be doing in terms of taking refugees, trying to find them employment, trying to train them or identify them for employment? Is there a practical agenda that can be addressed to this?
Yeah. I think we need to, but before going into that, let me just say that the current economic and social and political environment for taking in this new flow of migrants is very difficult.
Yes.
We're just coming out of a crisis. A lot of people are still trying to find jobs. At the same time, certainly in the sort of the lower half of the labor market, there's a lot of competition. People are being pushed out. For example, in the financial sector, thousands and thousands of people in my country are losing their jobs because the financial sector is still being restructured and trimmed. So there's a lot of competition at the bottom half of the labor market. And in that period, in comes a very, well, some would say it's not a very big group, but it is a big group of migrants coming in. So it's extremely challenging. The first flow of the migrants, this is what always happens. We're quite well educated, but as the process continues, you see that the sort of the average level of education becomes less. So the challenge even becomes bigger. So that's why I think many people are, for good reasons, concerned about this influx. What does it mean for my chances on the labor market? What does it mean for my chances to get affordable housing, etc.? There is the element of competition in society, and we can't take that away very easily. What can we do in practical terms? Education, again, is a big issue. It's difficult for migrants to integrate in European societies, much more difficult than in a traditional migration society like the US. One of the reasons is, of course, our social welfare state. If you have a strong social welfare state, you need to define who's in it and who's out, who has contributed and needs to contribute and then can make use of the system and who's not. It's inevitable that you sort of define the group of solidarity.
Right.
And for that reason, it's difficult for newcomers to enter the labor market, to enter the economy in countries that have strong welfare states. My message would never be, let's get rid of the welfare state. I want to maintain it. I think that's a great accomplishment in our European economies. So we need to look at ways to very gradually allow newcomers into the system, for them to gradually build rights of taking out of the system. We need to invest in education, make sure that they have the skills. Language is a big problem, of course. Every European country, difficult languages. So that will take a huge investment. We need to build more affordable homes.
Right.
Because of that competition element. If we don't make those homes available, they will push out others. It'll lead to social tension. And also very practical things, like many of the people that come from Syria have been trained professionally. Do they get recognition for the professional training that they did in Syria? I don't know whether diplomas, is that a good English word? Yep. The recognition of the papers that they have to make sure that they can also get to work in Europe. So it's a mix of elements that we need to do. But we need to reassure also the electorates in Europe that we can do this without tearing down the social welfare state and the protection and the rights and the opportunities that the lower half of our labor market has. That is a great concern.
Thank you for so articulately setting out the kinds of dilemmas you face. One specific dilemma, of course, you and other Eurogroup members face is that by geographic accident, the country where you have a significant budget problem in Greece happens to also be on the front lines of the migrant problem. Now, how do you see the issue of whether these can be kept on separate tracks, whether there's linkages? I mean, obviously, nobody designed or intended it to be that way, but that's how it is. So how does one balance that?
I think it just creates more urgency to try and help Greece back on track in economic and financial terms. Fiscal terms. So we're working very hard on that. The Greek government is working very hard on that. I really need to stress that we had as you know, a difficult year in 2015 with the Greek government working with them. But since the summer, there's been a lot of improvement, a lot of progress. The way we work together with them is much more professional and much more constructive. We've come a long way in terms of pension reform, the reform of the income tax system, privatization program, and a number of other issues. So I think we're close. And once we've established that sort of, I would almost say, last big package of reforms, then the issue of debt and debt sustainability will be on the table. So the migrant issue is not directly connected. We're supporting where we can the Greek government in dealing with the migrant issue, also with financial support, but also a lot of operational support. And at the same time, we're trying to make sure that the economy starts to recover. And the key issue there is trust. So as long as there is a lot of uncertainty about reforms and fiscal issues, trust is very weak.
Yes.
So it's a joint interest to get this last big package done, then look at debt sustainability, do more if necessary to make sure that they can manage their debt in the coming years. And hopefully that will create, again, some confidence for Greek people to start spending money or putting their money back into the banks,
right,
where they've taken out a lot of money, but certainly also for investors to return to Greece. So that's the kind of confidence that we need.
Thank you. You've illustrated, this will be my final question before turning to the audience, you've illustrated how much difference it makes who's finance minister sometimes, whether it's our friend Fabrizio Saccomanni was in Italy or as you are now in the Netherlands. Another one of your colleagues from the College of European Finance Ministers decided to make some very harsh statements about the ECB, and that the ECB is causing all kinds of terrible things on the political side. I'm not going to ask you to address his remarks directly, but you did mention in much more measured terms in your opening statement about the idea that there is some unpopularity in your own country and other countries because of the negative interest rate policy, because of the ECB policies. How do you think an independent European Central Bank should be taking that into account or not?
In an independent way,
okay,
I would say.
Very good.
So I spent a lot of time in the Netherlands explaining that the low interest environment that we have, and that has negative effects on our pension funds and insurance companies and even the business model of our banks. Yes, those negative effects are absolutely true, but the very low interest is not caused by the ECB.
Right.
It's very important to understand that, because people think, oh, Mario Draghi has decided the interest is low. It's not how it works. The interest is low for a number of reasons, short-term and long-term. Of course, we're coming out of a crisis. Investments is still very low. There's a lot of liquidity around. But long-term, Europe is an aging continent, so spending is not as high as it would be in a young society, and the same would go for investments. And I think there are technological changes, which means that investments are changing in its capacity and in its type of investments that take place. Anyway, let's not spend too much time on that. There are different factors that create a very low interest rate at the moment. And in that environment, the ECB is trying to do what its mandate tells them to do, make sure that the inflation stays close to below, but close to 2. People are saying they're going outside their mandate. I don't have any reason to think that. There has been a court case on a particular program saying, and the outcome of that court case was, no, they're inside their mandate. And that's all I know. Mm-hmm. So within their mandate, they should do what they find necessary to push it up to that 2. The effects, I think, there are positive effects, but they are becoming they're becoming less and less. Mm-hmm. I think we've seen the same in the US, where the first QE had a much bigger impact than the second QE, and I believe there was a third QE. So the impact of what you can do becomes less and less.
Right.
And Mario Draghi has always said, and I think he's absolutely right, look, we can only sort of support it in a accommodative stance, but the real work, the structural issues need to be addressed by the politicians. And he's absolutely right. So let's not focus too much on criticizing what the ECB is trying to do in that difficult environment. Let's focus on what we should do.
Thank you very much for that. People seem to have figured this out, but just to review, the minister has graciously agreed to take questions. It's all on the record. Jessica up front has a traveling mic for those of you brave enough to sit in the front rows. People at the back can line up at the back mic. We ask just 2 things. First, that you identify yourself when asking a question, and second, that you make it a question, not a speech. Please.
Thank you, sir. I'm Michael Ignatiu from Mega TV Greece. I just came from the IMF, and Mrs. Lagarde just told us, and I quote, that the target of 3.5 of primary surplus might be achievable in the short term and after heroic efforts by Greek people. But in the long term, is highly unrealistic. This is what she said about your target. And my question, Mr. Dijsselbloem, is why do you insist on this target? And also, are you planning in Washington to set the basis for the debt talks? Because we heard a lot of statements from the Europeans that you are going to have a meeting in Washington about the debt. Thank you.
First of all, I think the framework in which we're talking now is the agreement that we reached this summer.
Yes.
And the 3.5 for 2018 is very important in that. And as Christine Lagarde said, it's going to be heroic, but it's possible to reach that target in 18. The IMF has made a fair point. How can we assume that over the next 10, 20, 30 years, because this is sort of the periods of the loans, that the Greeks will on average be able to provide that 3.5% surplus. Now, there is absolutely a risk there, and I think we need to discuss what we do if they deviate from that target. As you know, there is a long-standing promise. I was minister, I believe, only for 1 month when we had sort of the redesign of the second Greek program. This was at the end of 2012. And we then promised that if the Greek government would comply to the program and do what was asked of the Greeks, that we would stand ready to do more in terms of debt relief if necessary. Okay. And I think that's still a good formula. We can discuss in more detail when, under what conditions we could do more, and we can discuss in more detail what the kind of measures are to bring down debt burdens. But I think that's still the right approach.
So you're not going to start a discussion in Washington, correct?
That was your second question, what's going to happen in Washington. As always, in Washington, you meet a lot of people. So we will have a meeting in which I will be debriefed by the institutions. And they will tell me where we stand, what kind of work and progress has been achieved in the last couple of weeks. And I will meet my Greek colleague, and I will meet Christine Lagarde and Wolfgang Schäuble, and everyone's here. So, but there's no formal decision-taking here.
Thank you very much.
Next week we have a Eurogroup in Amsterdam, and we will discuss it more formally.
Thank you very much for the clear answers. Please, next.
Hi, Martin Sandby from the Financial Times. In the WEO this week, the IMF made a very clear distinction between structural reforms that detract from demand and those that add to demand. And it made the clear call for, in a situation of depressed demand, to postpone those structural reforms that may depress demand further, labor market reforms like relaxing employment protections or reforming employment benefits, and focus on those that add to demand, product market reforms and some other labor market reforms. Do you agree with that advice? And does Europe have does it need to do something to heed that advice, or are we where we should be? And if I may ask a quick follow-up on the Greek question, it's being reported that the Greek government plans to introduce bills to Parliament early next week on income tax reform and pension reform, regardless of whether agreement is reached with the institutions. The argument seems to be that so long as the fiscal yield that has been committed to is achieved, it should be up to the Greek government to decide the distributive impact, the burden sharing domestically of the fiscal effort. Do you agree with that argument? If they do go ahead and introduce those bills before an agreement has been reached, what does that do to the negotiations going on? And what do you currently think is the likelihood of an agreement by the next Eurogroup meeting?
Okay, right. Thank you, Martin.
The first point on short-term effects, possible negative effects on demand by structural reforms, it's a fair point, but it's a dangerous point to make, because I know a number of politicians that will say, there you are, you see. Let's postpone the structural reforms. And that would worry me. So, but I do agree that we need to look very carefully at the design and the timing of reforms. Sometimes there can be an upfront positive effect in terms of confidence if politicians take a major decision on a reform and also legislate it, but the implementation takes, for example, 5 to 10 years' time. on pension age, pension systems, that is a sensible way forward. So some of the changes in our pension system may actually damage demand because we have an aging population, so we have to think about working longer and maybe reducing pensions, etc. The positive effect of the confidence that public finances and the economy will have a positive effect. So the positive effect of that kind of confidence can be made upfront by taking an upfront political decision. Implementation can take longer. That's one of the ways in terms of design of structural reforms to mitigate short-term negative effects on demand. You take a longer time to implement it. But then there are also a lot of structural reforms that can actually have a positive effect on short-term demand. Certainly, one of the pension reforms we did in the Netherlands was simply making sure that the increasing chunk that the pension system was taking out of the pay package of people was being controlled and actually pushed back a little. And that's a trade-off between long-term spending power or spending power now. And by doing that, we did two things. We made the pension system more sustainable in the long run and opened up more spending opportunity in the pay package of people in the short term. So it very much depends on the design of reforms. And let's not use this IMF point, and that's what worries me, that people will say, but the IMF has said, let's not do it now. Last point, in the fiscal rules that we have in the Growth and Stability Pact, we've created flexibility on specifically this issue. So if you're going to do major structural reform, which may have a short-term negative effect, you make that point to the Commission can take that into account and say, okay, we'll give you more time, more slack on reaching your fiscal targets if you do those major reforms. So that kind of flexibility, linking short-term impact on budgets with long-term sustainability of the budget, that could be used. And so far, only one country has applied to use that kind of flexibility, which was Italy. Of course, Italy has applied for many kinds of flexibility, and that may create some debate. But this is an interesting kind of flexibility that we have allowed.
Oh dear, I feel like I should almost give a right of response, but...
The second issue was on Greece. I also heard that the Greek government is pushing some of the bills in Parliament already. I'm not in a position to judge whether those bills are good, deep enough, etc., delivering the kind of fiscal adjustments, but also the structural reform that we have requested. That's up to the institutions to assess. If they find that the proposals are not good enough and therefore too early, they'd better wait until we have a whole agreement, then possibly more legislation will have to be done afterwards, or amendments will have to be made to those legislative proposals. Is my microphone still working?
It's mostly working, yeah.
Most of the time? Okay.
Yeah, a grant from the European Commission to upgrade our audio visuals would be very welcome. My colleague at the mic.
Nicolas Veron, I work here at the Institute and also at Bruegel in Brussels. Minister, the European Council of December last year gave the Council a mandate to study strengthening of the banking union, and that's now work that is taking place under Dutch presidency. Could you, I know that this discussion is not public by its nature, but could you give us a sense of what is being discussed, what you're trying to achieve, what are your aims for the completion of the Dutch presidency in that space? Thank you.
I think it's very important to just make a general remark to begin with, that sometimes in Europe we take on a new project, and for some reason always we seem to stop halfway. So we've accomplished stuff, but we never finish it. And I want to make sure that doesn't happen with the banking union. We also, in the time Fabrizio was still in the Eurogroup, we did a lot of work quite quickly and under high pressure to build and start the banking union. And we've accomplished that, and I think that was one of the triggers that actually restarted the growth in Europe. But it's not finished. So let's not make the same mistake again. This time, let's finish it. And it still requires a number of things, both on the issue of what we call risk reduction as risk sharing. So risk sharing, the Commission has proposed the last big building block of the banking union, which is called EDIS, the Common or European Deposit Insurance Scheme. So part of our discussions is, do we like that proposal? Does it work the way we like it to work? Is it going to be fair and effective? When can we do it, etc.? The other half of the agenda is about risk reduction. There are still in our banks' balance sheets a number of risks. There are, I believe the ECB has identified something like 160 national discretions and differences in how we treat capital requirements and the quality of capital in the bank balance sheets. So on that part of the agenda, how can we further reduce the risks in different banks? We also need to make progress. What would I like to achieve in the Dutch presidency? To at least have a political deal on the whole thing. We don't have to negotiate all the elements, because we can't. It will take more time. But we need to commit that we will push forward these elements in the coming years along the following timelines, so that at the end of the transitional period, which we already have in the banking union, the end is 2024. In 2024, we've dealt with all those big issues, both risk reduction and the risk sharing, the EDIS. That's what I would like to achieve. It's politically difficult, but I hope that my colleagues still have enough political capital to invest.
Thank you. Just a very quick follow-up on that, Minister. In a discussion earlier this morning, a couple of people raised the question of what is the sequencing between risk mutualization, like with EDIS, and risk reduction. Obviously, as you've said, you need both. When you say you're going for a political solution, do you have any strong feelings about that sequencing, or do they have to move in tandem, or is it just open to negotiation?
They have to move in tandem. I think, there is a logic there in substance, but there's also political logic that they move in substance. So I've heard from some capitals that they don't want to talk about the risks of sovereign bonds in bank balance sheets, and then I've heard from another capital in Europe that they don't want to talk about EDIS. So the only way to move forward is let's talk about them both and look how they interact in the coming years and how we can make progress.
Thank you very much. Next question, please.
Hi, I'm Rory McFarker, visiting fellow here at the Peterson Institute. My question is, in light of this week's WEO, it made a number of forecast changes. One of the forecast changes it made was to increase its estimate for the 2016 Eurozone current account surplus from 3% of GDP to 3.5% of GDP, which basically means that Europe has increased or swung its current account by about 5 percentage points of GDP since 2008. And it also says, a forecast for 2016, that the Netherlands will run a 10.6% of GDP current account surplus. So how would you answer the charge that Europe is essentially recovering entirely based on this external demand, that its aggregate fiscal position is simply in the wrong place, and that it is not doing what it needs to do to adjust the savings versus investment gap, using fiscal policy to help overall global growth, as opposed to growing on relying on the rest of the world to supply that demand?
Thank you.
Let me first make one remark about the Dutch surplus. You're absolutely right. It's very high, and yet I think it's for the first time in a very, very long time starting to go down. And that's very easy to understand if you realize that one of the reasons that we had such a high surplus was our gas
Tax?
No, we have gas sources in the north of the country.
Right.
And that is radically going down for security reasons mainly. Anyway, I won't bore you with that problem. So that's one factor, and the other one is we are aging, and a lot of money was saved in pension funds, so we have very large pension funds, and that's also another factor in our surplus. And in the coming decades, of course, that will start going down because we will be taking more out of the pension funds and putting in. And finally, but I hope that will be a constant factor, we have the largest harbor in Europe, Rotterdam, which means a lot of trade goes in there. Then on what can we do? I think we need to increase investments, and in some countries where there is fiscal space, but it's still limited to one very large country and I believe one very small country. So let's focus on the one very large country where there is fiscal space. More could be done and should be done, also in terms of public investments. And I've said this again and again. So far, it's not had a great impact on that particularly large country. But I do believe that there is, it will be money well spent. Also, investments in infrastructure as well as education and innovation in Germany would be very, very welcome, and it would help the overall balance.
Thank you very much. Next question.
Hello, my name is Nicholas Kleesis. I was very impressed that both the previous speaker, Mr. Moscovici, and yourself have really stressed structural reforms. One of the things that plagues Europe and other places around the world is high youth unemployment. Greece, for example, 46% of graduates from universities, it's about 46%. For women, it's about 76%. They say, in combating violent extremism, that the perpetrators of terrorist acts come from communities where there is high rates of youth unemployment. Yet many European countries have very difficult conditions in which to fire people. And if it's hard to fire people, usually companies are very reluctant to hire people. Do you see that in terms of structural reforms that countries will be more amenable to creating more flexibility in their labor markets? Thank you.
It's a big issue in many countries. Also, a lot of work has already been done here, but I think more needs to be done. It's about how the labor markets work, but it's also about how certain sectors in the economies are very much protected and closed. Because I think that in countries where there is a lot of protection and a lot of oligarchs controlling economic sectors, it's very, very difficult for young people, young entrepreneurs, etc., to enter into that economic sector. So both on opening up opportunities for new businesses, etc., in the economy, as well as adjustments to the labor market, more needs to be done. Anyway, it very much depends on the countries. So the situation, the situation in how labor markets are organized, the position of unions, social protection, etc., is very different per country. So we have the same kind of debate in the Netherlands on whether the fact that it's difficult to fire people is actually holding back employers to hire people. Work has been done on that. I'm not sure that that's the key solution. I'm also saying this because in Europe, when you talk about structural reforms, very often you lose the unions. Because the unions say, and I can to some extent understand it, they say, when you guys start talking about structural reforms, it's usually about taking away our social protection, our social rights, getting rid of the social welfare state. And I always try to bring them back on board and say, no, look, let's talk about how we can make the social welfare state sustainable, how we can make sure that we have a well-functioning and efficient economy, a labor market, etc., be competitive, and at the same time be able to invest and maintain a social welfare state. But that's the way we have to approach also labor market reforms. If it's just about taking away the rights and the social protection of our workers, populism will have a field day in Europe. So we need to sort of change the agenda and bring the two things together.
Thank you very much. Last question, please.
Fred Bergstedt here at the Institute. Let me just pick up from your last remark and ask you to put on your political hat, both in your own country and as a European politician more broadly. What message should we take from the recent referendum in your country that voted against the EU-Ukrainian Trade Pact? What's the broader message of that in your own country, for Europe more broadly, and what's the interaction, if any, between the nativist and even isolationist messages we're hearing from U.S. politics and our current political campaigns. How much is that feeding into your discussion in Europe, if at all?
I think the debate in the US and Europe is in many ways the same. And it's about whether normal people who simply have a job, trying to get by, trying to buy a house and get their kids in a good school, etc., see a perspective. And whether they think that all the adjustments, all these structural reforms and international trade and the European cooperation, etc., is bringing benefits to them. And that in Europe, since the start of the EU, has been a very sort of non-disputed issue. The EU not only gave us peace, but also prosperity. And that trust has taken a big, big hit. And now people are thinking, well, all this internationalization, my direct influence going to Brussels, to new institutions far away, people don't trust that there is a benefit in there for them. So let's take that serious, because they have a fair point. If we cannot find a way to make our economy more balanced, we talked about the hoarding of profits while the income of the middle class has not improved for a very, very long time. If we cannot improve their position and their perspective, then I don't think there will be any support for further trade agreements, European developments, etc. And I think that's a fair point that people ask that from us, politicians. What are you going to do to improve my position? How are you going to make sure that my kids will get that job? So that's what I'll try to address in my speech, what that requires. It doesn't require another big step forward, the big leap forward. I hear people say in Europe that if the Brexit is actually going to happen, which I certainly hope not, and I still believe it won't, but if it's going to happen, it must lead to the next big leap forward in European integration. I would say let's be very, very careful. Taking big leaps of further integration in Europe at a time when public support is very unsustainable, very unstable, would be a great political risks. So let's start delivering some results first. If that requires smaller steps rather than the big leaps forward, let's do the small steps to make sure that people have some confidence again, feel secure again, see that there is an economic perspective again for them and their children.
Thank you very much.
That's what the big debate is about at the moment.
Thank you very much. Minister Jeroen Dijsselbloem, it was terrific. Please join me in thanking the minister.